welcome. How are you?
Yeah.
We've both clearly gone for the floral prints behind
Good.
us. Spring has sprung. And the white shelves. I mean, how many of those have we seen during the last year behind people? Listen, thank you so much, Andrea, for being part of this. When was the first webinar that we did together? It was probably nearly a year ago. It was something like
it is.
Crazy.
Yeah.
Little did
I was thinking about that. Yeah, I was thinking about that, and I was thinking at that time we all looked shell-shocked and in crisis mode.
And we still do.
Yeah. Also, at that time we were talking about survival, and I think now it's interesting. The products we're going to talk about, or the financing we're going to talk about, is about recovery and genuine. I think genuine recovery this time, not a false dawn this time. So yeah, looking forward to sharing with you what's going on. And I'm about to turn off my Slack channel because
Yes, I've just done that on my WhatsApp. All of that's off. Okay, so everybody, so for all of our wonderful attendees, there are hundreds of you are piling in. It's quite astonishing. So the format will be that we're going to have a little look at the current situation. Andrea will then take us through what's changed since we last spoke, a lot. And then we'll go through questions. So feel free. We've got the chat box at the bottom, which seems to work better than the Q&A. I'm not sure why the Q&A sometimes goes a bit weird. So but use either of them. Every single question I will put, because I know you're not going to have many questions for me. You're going to be asking Andrea most of the questions. So yeah, so feel free to put them in. And what we'll try and do, if it's appropriate, is just answer the questions at the right time, rather than possibly doing it at the end, which sometimes feels a bit disjointed. So whack them in. Every single one we will get to. The session is being recorded. You will get a copy of the recording this afternoon once it's been uploaded up to Wistia. And let's start. So I guess we really want to just kind of talk about, because someone already said, sorry, I'm driving, so can't use video, but I've got a question later. Don't worry, we will get to it. So Swoop, do you want to give an overview of Swoop, Andrea?
Yeah, just for context for anyone who hasn't joined us before. So my name is Andrea Reynolds, and I'm CEO and co-founder of swoopfunding.com. And I was an accountant in my prior life, probably still am. So what Swoop does is it brings the entire funding landscape together in one place, so that you can access every form of finance that's available for your clients, or if you're an SME, you can come directly. We also do analysis of your client spend, and we look for savings. So across usual service providers like utility, banking, international payments, etc. Look, at the end of the day, this is all about getting the cheapest cost of capital that's out there, and also trying to improve the bottom line as we go, because as we all well know, Hannah, it's all about affordability if you ever are considering taking out a loan. And so we think all of them have to go hand in hand. How do we improve the bottom line? How do we get you the best form of finance and the best blend of finance, which is what we'll be talking about today.
Yeah, indeed. I think that's such an important point. You know, there are, and I'm not going to name names, but there are various lending platforms that that's, although it's just funding, isn't it? It's just funding. Whereas we kind of took a decision that anything that is identified using a forecast, which, and I'm going to keep battering the drum, with that, every small business should be running with one. Every single one should have a live financial prediction for their business, either on their own, but ideally with an accountant to help them just interpret it and say, well, you know, why don't we try this? Why don't we try that? Now, funding often is the last resort. It shouldn't be the first. You know, there should be other things that you go through from an operational perspective that you look to see if there are efficiencies to be made. But it's not my job as a forecast software owner to push people into funding. However, when that's the option, we want to be able to make sure that it's as seamless as possible and that you can actually afford it, as well as other outgoings that you have. So that is why I'm very proud that we are partners together. And, you know, really want to, because, you know, utility savings, things like that, it's not just about going and getting a loan, which unfortunately can be very, very quickly done. And then you know, the hard searches, even the application process can actually scupper you if you don't know what you're doing. So anyway, that's why we're partnered together. So why, you know, today's situation that a lot of business owners are in. Last year, when we were heading into our first ones, you know, Rishi had announced the CBILS, the BBL, you know, all of these things were coming in, and it was such a changing landscape, wasn't it?
Yes.
But what we have to bear in mind right now, if for the accountants who are watching this, how many of your clients have taken out CBILS, BBLs? How many of them have deferred their VAT? How many of them have got time to pay arrangements with their HMR, you know, their staff, the HMRC payments? There's a lot that's sitting. How many of them are benefiting from furlough at the moment but aren't going to? How many are going to need to make people redundant? All of these questions need to be answered first before we head off into the platform. So that's kind of where, you know, what we're seeing on our side. Andrea, would you agree?
Oh, 100%. And, you know, there's lots of questions clients, accountants, and business owners are asking themselves right now. So yesterday was a big deadline day for many reasons. And I know we're in tax year end, etc. But in funding world, CBILS closed yesterday, bounce back loans closed yesterday. It is the end of those schemes. It's another anniversary coming up as well, because those who took out bounce back or CBILS at the very early stages of lockdown are now getting to the point where the interest-free period is ending. So you're going to have people in these situations. Then you've got organizations that have already had that funding and are now thinking, well, I need more to be able to deal with the end of furlough, to be able to reopen and start trading again, etc. So there's many questions to ask. What I could do is kind of take you through what now, what do we do now? So CBILS, etc., all done and dusted. What does the next stage look like? What does 2021 look like?
When do the interest-free, when are the actual repayments start?
12 months after you've taken it out. So if you're one of the first in the door with CBILS, your 12 months is up, or it's coming up soon. And so again, I'll talk about what happened during CBILS that somebody may have experienced on this platform or on this call, and then we can look at, well, what can you do about that? So if you like, I'll just give you a quick synopsis of the what now that CBILS is gone, and everybody's probably hearing about the new scheme that's been announced called the recovery loan scheme. And that is now the new replacement of CBILS. And there's a couple of points that I think it's interesting for people to know, because Hannah, you'll remember when we were on these webinars, we'd always have questions on my company isn't eligible because it's less than 2 years, or my company isn't eligible because it's an undertaking in difficulty, etc. Or we also had people on that were saying, oh, I have a bounce back, am I allowed add on to that with a CBILS?
And they weren't at the beginning, were they? And then it changed.
And you had to refinance your bounce back to get a CBILS. So I think if I just give some of the salient points around the recovery loan scheme. First thing is, if you have a CBILS or a bounce back, you are able to utilize this scheme as another form of finance. So they're not saying, no, you must close your CBILS and your bounce back to be able to get this. The second point is that under the British Business Bank rules, there's no minimum trading history requirement, and there's no minimum turnover requirement. Now, last time the British Business Bank said, no, you had to have a minimum criteria on those two matters.
With viability, wasn't it? This word viability was talked
and yes, undertaking in difficulty. The new way that they phrase that is more, it's more prescriptive. They're talking about, and the company or group of companies cannot be involved in insolvency proceedings. So last time it was like a balance sheet test. This time they're being more prescriptive, so we can really start to understand what eligibility is. Now, I'll caveat with those are the British Business Bank criteria. Lenders will vary their criteria as they roll out this scheme. Second thing to note is it doesn't start until the 6th of April. And again, when CBILS launched, there was some grey areas, and that will all start to emerge over the next week or two, and we'll be able to share that with your
Oh,
community.
we'll do another webinar, Andrea.
That's what we will do. We'll let people know. Some other salient points to note, because there was question marks around this, about PGs, which is a big one, of course. Rules are...
Just for those personal guarantees.
Oh, personal guarantees. Yes, absolutely. First thing you're going to ask when you're taking out a loan is, are you expecting a personal guarantee? Now, the benefit of CBILS was it was no personal guarantee. Just to be clear for everyone, it's no personal guarantee up to £250,000 under the new recovery loan scheme also. Okay. Now, just to be very clear on that, that is the rules according. So if you go on .gov, you'll find that they say that. If you go on British Business Bank, they haven't really set that out very succinctly. So just letting everyone know that is the case. In terms of amounts, you can go from 25,000 to 10 million. Again, CBILS was 50,000 and above. This is 25,000 and above. Now, the key difference is you are not going to get an interest-free period, but all of the other benefits are there. So I would say, you know, if you've got clients who have had a CBILS and they need more, this is an option for them. And let's say they got the no PG on the CBILS, they're also getting their no PG on the business or the recovery loan scheme as well. You might have clients who entered a CBILS and they got a fairly hefty interest rate. And it was probably, let's kick this can down the road because it's 12 months of interest free. And so those ones we would be looking at a refinance. Because if you think about it,
taking the whole thing, refinancing under the
refinancing it and looking for a better rate. And the bottom line is, you know, strength of business is a big deal to lenders, right? We hear this coming up time and time again, you know, what their decisions are. So if you've survived COVID and you're looking to recover and grow, etc., then obviously you're 12 months older and you've survived COVID. So, you know, there'll be some nice ticking points there against your business, which is great. Again, that you have to show that you had a COVID impact, etc., and you're looking to grow. It can be used, by the way, for anything got to do with returning your business to growth. So it can be cash management, it can be purchase of an asset. It could just be, you know, that you want to invest in a new marketing website. Whatever it is, that's what it's for. Mm-hmm. So I think just to be mindful for those who are thinking, oh gosh, those schemes just closed. In terms of who's going to lend these, because again, Hannah, if you remember, we had
we had 10 and then it was like, oh, there's 41.
40. Yeah,
exactly.
And of course, we're all going to think, oh, what about the banks? Will the high street banks be doing recovery loans? And the difference between this stage we're moving into versus the last is when we started lockdown, the banks had capacity to lend, and then the government landed on them. You're all doing bounce backs. Now, do you think high street banks wanted to do bounce backs? Absolutely no way. So their capacity to lend is going to be more constrained as we go into this year. So don't be offended or feel depressed if you get a no from your bank. You know, they're regulated. They have to follow the capitalization rules. So they're looking at their balance sheets and saying, we have a lot of bounce backs, we have a lot of CBILS. What is our appetite to lend moving forward? So the alternative lenders are going to become more important this year and more prolific in their lending, because a lot of the alternative guys had to sit back during COVID while the high street banks did all of the lending. So we've had a pent up capital flow within the alternative lending, which is good news, by the way. It means we will have more options moving into 2020.
And that was one of the questions that we had a lot last year was, you know, can I only apply to my own bank? Well, no, that's not the case, is it?
Yes, and that's the good thing. And I think the alternative lenders, government are very pleased with how they performed in the first stage under CBILS. So now it's becoming the norm to go back to those. So they're all applying, and most of them have already been approved for the recovery loan scheme. So
we've got a few questions about the recovery loan scheme. So whilst we're talking about it, let's cover those off. Okay, so first one, there's a few, Andrea. I think we kind of covered it, but the first question was, how many years trading do you think that you'll need to have in order to qualify for a recovery loan?
Yeah, as I say, the first rule is you go to see what the government says, and then the government issues those rules to every single lender. Then every single lender comes up with their own version of that. Right. So we will definitely find some lenders who will, so especially the non-for-profit organizations that distributed CBILS, they would be more likely to look at ones with a younger trading history. And unfortunately, my answer today is we don't yet know, because we will know post the 6th of April. All of the lenders said on the 6th of April, we will give you Swoop. We're obviously live on their platforms, so they will notify us on the first day that they make that decision on the lending criteria. And then what we will do from that is assess who's in the younger trading category, and we can notify you and say, this is the cohort of ones. Because I think there's a large cohort of SMEs who did not get a CBILS because of the age situation. They're obviously older now.
There are questions about startups. Can pre-revenue get access these loans? So again, if we don't know yet, but
as I say, in principle, yes. We just need to identify the lenders who will play in that space. And as I say, because the loan starts from 25,000, and we've had a lot of alternative lenders who couldn't let, the ones who used to do the 25,000 category for the younger businesses, they had no business last year because the government was giving out bounce back loans. So they'll be back in the market, and we'll be looking to see, do some of them become recovery loan scheme operators, and we can notify you guys around that.
And will so on the 6th of April, are the recovery loans available from that date?
Yes. Right. Yes. So as of that date, some will be more prepared than others, but yes, we already know that we will have lenders up and running on 6th of April.
Do we know which alternative lenders are participating in the recovery loan scheme? Someone's asked.
Yeah, they're all, nobody has confirmed 100% yet, but all of the ones we've talked to, all of our CBILS lenders are saying, yes, it's a natural progression. We've been approved by the British Business Bank. Once we've gone through the pain, of course, we're going to continue. There's also some other new lenders looking at coming in on this one as well, because they saw the success of CBILS. So as I say, 6th of April, big day. And maybe what we'll do, Hannah, is a mail out with all of these answers.
Yeah, we'll do an FAQs and preempt questions because we've got a lot of them here. Duncan's asking what the key difference between the CBILS and recovery loan scheme is, which is better for the customer, which is better for the banks.
Yes, yeah. As I say, the benefits for the bank, the benefits for the lenders are there, and the sort of the cons for the SMEs is there's no interest free period.
Right.
That's the
first, which had the 12 months. Yeah.
Exactly. The second, the benefit for the SME is the rules around trading history, turnover, the fact that the loans start from 25,000 rather than 50,000, the fact that the no PG up to 250,000 still remains within this scheme. Those are all huge benefits. I mean, it's a lot more beneficial than I was expecting it to be. I did not expect to see the no PG. So that's big news. And it's big news for those who might have an expensive CBILS as well, in terms of looking at a refinance.
For sure. And so if Tarek is asking, if I have a BBL, what would be the minimum recovery loan? Do you think it could be extended to? I guess
it all comes down to, here I'm going to give you a plug, Hannah, it comes down to affordability. Right. All of it's going to come down to affordability. So it's just purely doing your cash flow forecast and seeing that those repayments are
that's such a key thing. It's not just the case of going, here's my historical stuff.
Yeah.
What can I get? You must work it back first before you make a decision, because your entire business depends on you being able to pay these things back. So Please bear that in mind, and we'll go through how to do that later.
Yeah.
Presumably startups are better utilizing the BBB startup loan product.
Yes, we are still good advocates of startup loan. We do direct into the startup loans company, so we can fast track you through that process and help you manage your applications, because it can be quite laborious. So still big fans of the startup loan. And for anyone who doesn't know about startup loan, you can get a capital repayment holiday for the first 6 months, so interest only for the first 6 months. You don't have to take out the full amount in one go. So let's say you're thinking, I really need 25,000, but I don't think I can afford 25,000. You can get your first 10, and then you can go for a second loan under the scheme, and then you can get your top up to your 15,000. It's 25,000 per founder or promoter of the business. So if you have two directors, you can get 50. So it's still a really, really good scheme. And I would, yes, recommend that if you're in startup mode at this stage. I think it's important also just to say, the recovery loan scheme, like CBILS, is term loans, okay, and as is startup loans. And term loans for a lot of businesses is not suitable for them right now, because they don't know what their revenues are going to be, okay? So they're thinking to themselves, do I really want to commit to a fixed repayment coming out of my bank account every single month when I don't know what my revenues are going to be? So I suppose, just to make people aware, there are products out there, revenue-based finance it's called, and it's really growing in popularity and has been hugely popular for a lot of our customers who say had a bounce back loan and were like, oh, I don't know if I can take on any more fixed term debt. Revenue-based finance is if you've got doing anything online. So let's say you've moved off to the high street and you're now online, you're taking payments by credit card terminals. So how revenue-based finance works is they're looking at what was the average of your revenues coming in, or what does your Google Analytics transactions tell us? So if you spend £1 on Google Analytics and you get £1.10 back, we will lend against that so you can increase your marketing. So there's lots of variety in terms of flexible facilities that might be more comfortable for a business to take on.
And that's on the Swoop platform, so you can access these.
Absolutely. And the thing about that is, you're paying a percentage of your revenues that are coming in. So you're only paying as you earn.
So it scales.
Yeah. So I think that's another one. And the last one, I think, because lots of people are asking, what else can I do? I mean, the other one is commercial mortgages. So maybe doing a refinance on a commercial mortgage, because obviously you'll get better rates, or taking out your first commercial mortgage. So there's lots of other avenues. If a term loan can be sometimes quite juicy out of the cash flow. And the last thing, I suppose, on term loans and the recovery loan scheme, as I said, we're really keen on the best blend of finance to reduce the cost of capital, okay? And it's really important for businesses to know, in the grant space at the moment, what's out there that's not going to cost me money, that I don't have to repay, okay? There are what's known as the resilience and recovery grants. And I'm going to give you a quick why this is useful to know. So let's say you've got a client, or you are a business that's looking to buy plant and equipment, or whatever it may be. And let's say you were to take out a recovery loan for 250,000. Your average monthly repayments are going to look like about £7,800, right? If you get a resilience and recovery grant, you can get up to 50,000, as long as you're matching it with some other finance.
Okay.
If you deduct that 50,000, you're now getting a loan of 200,000, and your monthly repayments going out the door are 6,250. That's from 7,800 to 6,250. And this is what we need to make businesses aware. It's there for you. It's there for you for a reason, to help you recover. And so the blending the cost of capital to get that down is phenomenal. And then if you add on top of that your super deduction tax allowance, you're getting 25p back for every pound you spend. Suddenly, what looked like an expensive investment, you're getting in tax credit, you're getting park grant, and you're getting your loan.
And
that's the
I mean, it sounds like it's going to be a minefield to navigate that, but it isn't, because that's why you exist, right? This is the point. And it's not just about take a loan out, off you go, take a loan out, off you go. This is all about getting the lowest cost of capital.
And planning. I'm not just saying this because I'm on a Futrli webinar, but planning all of that into the cash flow and seeing the impact of
turning them on, turning them off.
Yeah.
We can do that if we can't. It's so important, and it can give you instant answers.
Exactly. You know? People always go, oh, should I bother applying for a grant? Well, pop that in your cash flow, see the different scenarios. and hey, guess what? Suddenly it's a useful thing to do. So yeah, I think just making people aware, don't always just think, oh, the loan is going to cost me. There's so many other options out there, as I say, which is why I started Swoop in the first place.
Indeed. Very responsible. So do we think that the recovery loans are going to be a lower interest rate generally?
Oh, interest rates are always around the credit worthiness, the strength of the business, credit score being a big one. Mm-hmm. And Hannah, you and I had a big chat about credit scoring this week, actually. And it's important for people to know that if you apply for a loan, they're going to do a hard credit check. So if somebody says to you, oh, we've pre-qualified you for a loan, then they've done a hard credit check. So what I would say is,
and it's really dangerous though, isn't it? And there are some platforms that are doing this right now, and you must be aware of that. It's just
the important thing. Yeah, really, really important. Don't go applying to lots of different lenders. The key thing here is, if you are applying and you're saying, oh, I'll send one off to here and I'll send one off to there, every single one of them will do a credit check. So we've had customers come on and say, my credit score was really good, and now it's absolutely gone to the dogs because they didn't realize. So we don't do that. We do soft checks so that we make sure that you are very close to being approved, because the last thing you want to do is go forward with an application where you're getting a rejection. So that's key as well.
So important. I mean, it happens in our own personal finances when we apply for a mortgage. You know, it's the same thing. Your business is going through exactly the same. So if you do have a bad, so Dean's asking if you've got a bad personal credit score, is that looked at, or is it the business that's looked at?
It depends on the lenders, and again, we can direct you to the right lenders. Personal score becomes very, very important if it's sole trader in particular, or if it's a very young business where they can't see, you know, what they're looking at is, can the business support the loan? What's the viability of the business? And then if you're a director of a business, they tend to do a credit score check on that. But as I say, we've lenders in different positions for different reasons. We have
you're not going to put forward your business to one who's got much more stringent. Exactly. So that's the point of having the advisor and a human behind it, because you have that as well. It's not just the tech, it's real people.
Yes, and that's really important. And I would say to anyone, like, never feel bad about a bad personal credit score or a low business credit score. We've all been through the mill. And so it's about just finding the right provider, helping you get that back up and improved. And then look, even if it's an expensive one, refinancing is what we do best. We know when we can then move you onto a better rate, because you've had 6 months of performing on that. So I would say, like, just to give you a sort of some insight, at the beginning of COVID, the average credit safe score on the platform was 55 to 56, and now it's at 43. You know, people have suffered, and so it's just important to know you're not the only one. I always feel people feel embarrassed almost.
It can sometimes be really lonely, you know, and if you've got no one to talk to you about it, which, you know.
But there are different solutions for different situations. So, you know, always good to even just chat to us about it.
Has HMRC confirmed that recovery loan interest is corporation tax deductible?
We haven't had confirmation yet. As I say, there are all these
We're going to do another one, guys.
That is one that there's a few items, as I say, even the interpretation around insolvency proceedings, they need to confirm to us. So I'm expecting between the 6th and the 10th, 6th to the 13th.
And guaranteed within the next 2 months afterwards, there'll be more.
It'll all start to, so
what we'll do is we'll do an FAQ out as email to everybody, but then we'll probably do a wrap up in a few months time just to go, right, this is what's happened, because it's quick.
Exactly. And we'll also know within a month what the lenders are actually doing.
Sure, exactly. And what and how fast they're pushing it through. Because I remember last year, I think it was HSBC was with one of the examples that they just didn't have the infrastructure to cope with it, which was crazy, but you know.
And also with again, we're in much better shape in terms of distribution of loans this time than we were last time, because the last time the lenders, it was all a shock. No one was set up. Everyone had to deliver new products within. This time, it's pretty much an elongation of CBILS, just some slight changes in criteria. So we're in better shape. So distribution should be much faster.
Okay, more questions, because they're just flying through as ever. What if you've been declared bankrupt within the last 4 years? I guess to the credit scoring and all of that side of things. Yeah,
and that is a tough position. I'm not going to beat around the bush on that one. That one is a tough one. But as I say, there's also non-for-profit or organizations that are distributing government-backed loans, and they are on our platform for the very reason that where the private sector cannot lend in those certain circumstances, we then go to those guys, and they actually work through difficult credit situations with us. So it could be that we're able to look at it on
don't lose hope. You know, there could well be a solution for you.
Yeah, and I would say
it's difficult, but
and again, it might be there's a grant there. It might be that there's other elements there that we can get to. As I say, sometimes you got to see it as a patchwork quilt. Sometimes you got to, you might want 50,000. We might have to break that down into this grant here, this saving here, and then the final bit is your loan.
Is it Philip's asking, is it possible to obtain your current credit rating before applying? Well, of course you can for your personal one, but I think like even Experian does a business credit checker, doesn't it?
And we do. We can provide that for you in terms of your business credit score and giving you feedback on, hey, this is where you're fitting within the range. So if you're thinking seriously about an application, you think, oh, but I'm not sure how will they view it? So it's one thing getting your score. What use is that to if you don't know how the lenders view that score?
Well, so each one will view them differently depending.
Yes, exactly.
Okay. Will people be allowed to borrow a larger sum under the? We've answered a lot. Joanne asked a lot of questions early doors, but I know that we've answered a lot of them. Can you delay the start of the CBILS repayments? That's a good question.
Can you delay the start of, so as in capital repayments or both? We haven't. Now, again, that's a very good question. I'm not going to say a definite yes or no around that because it'll come down to the lenders. I do know that there were instances of repayment holidays.
Okay.
Now, it depends on where this person is in their journey of, are they past the 12 months and they're looking for further extension of that? The interest repayments will certainly kick in because the government's not extending that. So it'll come down to the capital repayment holiday. I don't have an affirmative on that. It will depend on the lender. So if they want to share who the lender is after this, we can come back with it.
If you send it to the panelists in the chat bot, no one else will see, so you can do that. It was an anonymous person. Kathy, aloha. Kathy runs Brighton Gin. Sorry, I just love her. What are the views about whether or not to replace the CBILS with a recovery loan and pluses and minuses? I guess it's just like, do I even look at it? Do I not?
Yes is the answer. You should always look at these things. And again, we don't have to do a hard application for you. What we can do is look at what rate we could get you. It could be what rate we get you and do you want to top up? So Look, a general rule of thumb for anybody is if you've taken out a loan and you're thinking, oh, I might need to top it up, or oh, can I get a better rate? We do a renew every 6 months to see, because every 6 months you've got another 6 months of history behind you, and you've strengthened your business case. So the answer is yes. Let's have a look, because we can get a better rate, which means you might want to top up or reduce your costs going
But
out.
what happens if you've had a tough year? So 6 months might actually not strengthen your business case. It might actually.
Yeah, the recovery loan scheme is actually saying, and you have been impacted by COVID. So they'll still be looking at your pre-COVID trading. So it's all of the benefits of CBILS in terms of they look pre-COVID, and they look at how you managed yourself through COVID. And again,
what are they looking like at for as a minimum forecast term? Like when they're looking at you projected out, because it's not just historicals, is it? Is it a year?
Yeah.
Is it 2 years?
The next 12 months is the key. And a lot of the time also they're looking at the credibility of the forecast, so that you're not putting in, so when, and this is actually across the board, if you're ever applying for a loan and a lender says, and I want a forecast,
yeah,
like you should know that they have the data on industry margins, industry growth projections, etc. So they're looking at the credibility and the quality, and then they're looking. So if you say, "Oh,
they will expect to see seasonality and those sorts of, it's all of those things that make your business real. But do you know what? Do it in a realistic manner, and then use it. Don't just use it for the funding event.
Yes,
as your business maps app. That's what it's supposed to be. Make every decision within the confines of your financial future, and you will have so much more confidence and control over the decision making, just going forward. Okay, more questions. What if the business was started up during COVID? So
and by the way, we've had loads of businesses start and
over 800,000 or something.
Yes, and most of them are starting online first, so they don't have lots of baggage to bring with them. Yes, absolutely. There's loads of options out there for businesses that have started, because obviously you've noticed an opportunity, and you were confident enough to start a business during COVID. So I would say absolutely. There's, whether it's worst case scenario, it's a startup loan, which by the way is a great loan scheme. It could be revenue-based finance. It could be a business recovery loan. The only bit that you will question there is, were you negatively impacted by COVID? It could be that, yes, I was, because my trading would have been significantly higher, and I lost this market.
Good.
There's always something. So yes, don't think just because you've started this year that there's nothing out there for you.
No. Would the recovery loan potentially be available to purchase a business car, or would there likely be stipulated criteria that it's not eligible for?
Purchase a business car, is it?
Yes, a car.
Yeah. Again, it says in terms of the criteria around the assets, they've been pretty specific on plant and equipment, solar panels, etc. But if you're saying the car is required to go visit clients, yes. There's a lot of talk around anti-avoidance and all this kind of stuff, and but truly, like, as long as you are recording it properly, bookkeeping recording is super important.
Please use bookkeeping automation.
And yes, and so as long as you're proving it's for the purposes of the business, and on that as well, like bookkeeping is going, us keeping really good accounts, particularly for super deduction tax allowance. So it could be a culmination of lots of bits of plant and equipment, or office furniture, or solar panels, or whatever. You could be buying a bunch of stuff throughout the year. It's not necessarily one big purchase. So keeping really good records on that is going to be really important.
So just for those that don't know, the super deduction scheme, what
is that? So it was in the most recent budget. And so for accountants, they're used to investment allowances, where you've invested in plant and equipment or whatever it may be during the year. Investment allowance would have given you about 19 pence on the pound back in credit. This is the first time we've had a capital allowance announced that's over 100%. And it's there for, the scheme is there for 2 years only. And so basically if you're buying, you know, I don't know, ladders, drills, cranes, office equipment, desks, etc. If you're getting your offices ready for reopening, then you would basically be recording that. And even if you are taking out asset finance or hire purchase, because this was a gray area when it was announced, as long as the transfer of the ownership of the asset at the end of that contract is coming to the business, you can include that too. The other one we are waiting for confirmation on is, let's say you build software, Hannah, like you, and you capitalize that build on your balance sheet. Can you apply for the allowance on software? So that's software is one that we're looking for clarification on right now. But what I guess what the point is, if you're purchasing something, let's say it's £100,000, you're getting 24,500 back in a tax credit under the capital allowance scheme. So what they're trying to do is make it really, really attractive for people to consider investing in business investment. Business investment fell by over 12% between 2019 and 2020, and that's the purpose of this. So think of it again, as I say, in context of recovery loan, maybe a grant, and your tax allowance possibilities.
And there are a lot more grants coming out at the end of the year. Do you want to talk to that, Andrea? Is that right? With
yes. So funnily enough, the resilience and recovery grants that are available at the moment, the ones that I was saying, you know, you can get from 5 to 50,000. It's still European money. And so this is the very last scheme under the European Regional Development Funds. And there, by the way, there's other grants out there as well. I'm just trying to get people to feel aware of there are grants. But what's going to happen is later this year, we're transitioning to, it'll be purely UK government grants support coming through. And so what we are anticipating, and this is the feedback we're getting, is that towards the end of the year, we'll start hearing the announcement of the UK versions of these grant schemes. So we're expecting, once these ones dry up, there's going to be a new influx of grants coming. So again, we'll keep you up to date on all of that as they...
Yes. Okay, superb. What else do we have? We have got, can we just confirm the PG rates? Is it for, so if you've got a CBILS at 250 and then you take a 250 recovery loan, for instance, is it for both up to 250 or is it just the first one?
Both.
Both. So it's 500k effectively is
two separate products.
Yeah. Fine. Perfect. We have a US bank that didn't participate in the BBILS, CBILS last time and found the other banks weren't open to new customers. Do you think that will change with the recovery loans?
So a lot of the banks stopped taking on or basically closed your ability to open a bank account. And again, we do bank current account comparison on Swoop, and you put in, you know, you need, and we show you that. So of course we're well up to speed on who closed, who opened. The majority of the reason for that was actually not CBILS, it was more on bounce back because there's significant fraud in relation to bounce back. So they were all trying to close down the avenues for fraud, and opening new bank accounts was one of them. So it was very difficult to get a high street bank that was open for you to open a business account. That's changed. They've all reopened. We're waiting on one more to reopen, but they're pretty much back to normal business on, I want to open a business bank account. In terms of the, I think they mentioned an American bank not participating in some of the banks, particularly the big investment banks, like say non-domestic banks, are actually looking to participate in the market, but not necessarily under the government loan scheme, because they want to give options. Let's say you're one of these who just can't get something under the government loan scheme. So we're going to be announcing a product, a non-personal guarantee product of up to from 500,000 and above. because again, if it only goes up to 250, you're going to have businesses that say, well, I need 500,000, 700,000, a million, and I don't want to give a PG, and I need it for growth capital. So we see a gap in the market there, and we'll be hopefully launching that in a few months. Again, we'll let you know. Just to fill that gap, there's definitely a gap there in the 500,000 to 2 million mark for growth businesses.
Do you know which banks are taking new applications? Gareth said he's tried 10 and they won't take any new business accounts.
Oh my gosh. Yeah, I'll take Garrett's details at the end of this, and I'll get our bank team to find him. I absolutely understand his pain. The number of people who have come to us to say, I can't get over it. Like, yeah. I'm begging to open a bank account and give these people my business. But that has been the norm. Yeah, will Starling offer the scheme? I absolutely anticipate Starling. It's not 100% confirmed yet. We've been the most successful referrer to Starling for the CBILS scheme.
I mean, that's the thing as well. They trust your platform to have done the heavy lifting for them.
Yeah, we have apparently best credit quality and conversion, they have big commitments for lending at the moment, and they've done a great job on CBILS. So yes, that'll be.
Do you think the recovery scheme is going to be a fixed 10-year repayment term? David's asking, and he's also asking, do you think the lenders will view an application more favorably if applicants have life insurance to protect their business?
Good point. Again, as I say, if I was to give you the top 3 things that they're looking at, it's looking at strength of the business itself, the credit history and score of the business, and number 1 obviously is affordability. So what they look at is affordability of the loan, and then your propensity to pay back that loan. And your propensity to pay back that loan comes from, what have you done in the past? Are you good at making payments, etc., etc.
Yeah. Okay, well, I think that's a perfect. We've got lots of people saying, what's Andrea's platform called? What's Futrli? How do we get in contact? So, Andrea, do you have Swoop funding up on your screen that you can do a screen share? And I'll do a quick run through of the Futrli side of things too. Is that? Do you want me to go first? Because I'm prepped.
Just because I totally forgot about that.
No worries. Right, okay, so we are Futrli, Futrli, because we're all about the future, right, guys? It's very straightforward. So basically, we've got a few products. This is Predict, which is our most recent product, 3 years in the making. It actually does the forecasting analysis for you. How it does that is looks at different transaction types, so invoices, bills, journals, which you would use for payroll, for instance, or not you, your bookkeeper, and cash transactions as well. So each one of those things behaves differently within a business. Each one of them has a different impact on cash. We also aggregate every single customer, if you're a non-cash business, every single customer's average payment days, same that you're doing with suppliers, so that we've got the activity, which is all of yours. So you can see all of these little accounts here from the chart of accounts have got the Futrli predictions in them. So the activity would be your net sales trends, and then the cash impact is when those things are going to get paid. It's the only product that's it's a hybrid solution. So what that means is we've got all of the P&L and balance sheet transactions we're analyzing, but we also have all of your due invoices and bills. So for short-term cash flow accuracy, you can be super spot on. So if you've got any invoices or bills that you know are going to get paid at a different time, or you need to exclude them, you've got that control center there to make sure that your future cash flow, which is up here, we can see Josie's Florist has got some troubling times in May that you can really start to look at. Okay, what's the current state of play? Now let's build on it. Going back to the home screen very, very quickly, sales cost of sales expenses, that's your, it's your powerhouse, it's your engine room, that's where you're spending most of your days. But we also, because it's a hybrid, have not just cash flow. So this is not just a gross cash flow tool. We've got all of that as well. But you can actually, you've got your full profit and loss in here. You've got your balance sheet and an operating cash flow statement, so that you can understand your profitability and all of those other, really key things that are needed. Again, automated, generating it twice a day. Balance sheet side of things, we actually support cash and accruals VAT schemes. So we do all of those calculations for you. And if you've got deferrals, you can also get these, just it's worked in. So just if you've taken the VAT deferment, stick it down, stick it in here, and we will make sure that those payments happen automatically for you. Again, if you've got any loans, make sure that you've got your repayments in here. You know, all of these plus buttons means you can add your own. So there's all different types of forecasting methods. Each one of them will have the ability to either show the activity. So for instance, let's just show you the unit base, which is not pertinent to a loan account. However, if you're selling products or services, you've got the ability to do price changes and play around with these things. But every single forecast has got the ability to go, right, well, is there cash impact? There might be some things that are journals that are non-cash. So you can look at all of that. You can also finally turn on and off your predictions. Why do you want to do that? Different scenarios. What happens if I take out the grant? What happens if I have this loan versus this loan? What happens if I decide to take on more staff? That's where you kind of turn our predictions off, put yours in. So that's that one. Bigger businesses that need board reports, we've got advisors. So this is where you can create any KPI for anything. You've got live dashboards, you've got longer term 10-year strategic planning. It's a three-way forecasting. It's much more manual. We don't do automatic predictions with this, and you will need to understand your finances, whereas predict is literally plug and play, and you've got a forecast to start from. And it will be very good predict. The first one that I showed you for showing you trends that you weren't necessarily sure were happening. So it's kind of like an early warning system. But you get printed reports, and you've got so much stuff in Advisor. It's great for those bigger small businesses, growth businesses, and not the very, very small business, but perfect for anything else. And then finally, for our accountants on the call, we've got Predict Plus. So leveraging our prediction technology. Predict Plus is something that we've just launched, which basically takes your entire cloud portfolio, so all of your Xero and QuickBooks clients on Ledger or above. So we don't do, we need the journals, we need the transaction data in it, but it gives you the opportunity to really have a look at the health of your portfolio, so that we'll do averages across all of your portfolio. We inject the information into Google Sheets so that it's malleable for you. This is run once a month so that you can then see, for instance, you've got a full dashboard for every single client that you can look at, their cash buffer. We're looking at, because we're a hybrid again, we can look at their exposure due to unpaid invoices, bills, that as a percentage of revenue, their profitability, their liquidity, all of these, and really, really key, total debt owed. So what we do is we scan the loan for loan accounts, and we exclude any that look like they're a director's loan. So we can't, it's a lot of it's based on naming conventions, but it's a great indicator for you. So if you've got 200 clients and 50% of them have got CBILS, BBLs, or loans that aren't being paid back yet, they have to get that into their forecast. You know this, they might not. And let's really look at their affordability, because it might mean in December they've got a cash pinch point because they've not factored this in and they just don't know. And then really, really key, you've got the ability on a month-to-month basis to then say, right, well, who's moved into high risk, who's moved into an opportunity level, who are the ones that haven't got a cash buffer. For this full portfolio benchmarking, so you can see how everybody's comparing against your portfolio averages. Oh, sorry. And then on the data side, this is where this is the export, that basically all of that, oh my goodness, sorry, I put Spotify on for some reason, that you can then start filtering, sorting by those that are medium risk, high risk opportunity clients, based upon their cash flow health and their business health score as well. So it's there's a lot we can do to help you understand which clients are the ones that need your immediate attention, to then pass over to Andrea at Swoop to make sure that we get these small businesses helped as efficiently, as quickly as possible. Andrea, over to you.
Gonna see if I can share my screen. Am I allowed?
Yes, you're a co-host. Yeah. You should be able to. You're a co-host. Make host. I'll make you the host. There you go. Maybe that will work.
No. Deciding not to work for me. Let me come back out.
I'll bring it up if you can't.
I have share screen. Let me see if I can. Yeah, I'll just quickly show. I'll just quickly navigate the landing page just to say this is, you can see my screen. Yep. This is swoopfunding.com. So as I say, we do everything from loans, if your businesses are looking to raise investment, grants, commercial mortgages, startup loans, direct and startup loan company, the infamous business current accounts, and then we look at savings on energy, banking, etc. So you can start down your primary journey of whichever one is most important to you, but regardless, when you get to the end of that journey and see your first primary matches, we're also able to unlock the grants, etc. There might be one or two extra questions you answer. So you can sign up as a business owner, or you can sign up as an accountant. And as Hannah says, absolutely fabulous if you are already a Futrli a client and you've already done your cash flow forecast. So you can either integrate your cloud accounting on the system. You can integrate the bank accounts to get your bank analysis, which helps the lenders make faster decisions. And the cream of the on top is if you've got your fabulous cash flow forecast from Hannah and the team at Futrli, using Futrli's brilliant Predict, which we love ourselves, then fantastic. That means you're in good shape for us to quickly get through and access a loan for you. What you get to see are your matches of all of the funding options that you are eligible for. As I say, please do not worry. Nothing is going direct to the lender without your consent and that you're happy to do it. And you'll always get a funding manager. All of our team are ex-bankers, really seasoned credit analysts. And so what we decided to do was marry tech with lots of fabulous gray hairs like I have, so that first of all our lenders like us, because it's important when an application goes in that it's at the top of the pile. And the way you get to the top of the pile with lenders is providing really good qualified credit applications. And so we do that, and we're able to do that scale because of the tech and the team. So yeah, as I say, would love to, if anyone's worried about whether it's credit rating or they're thinking about, do I have too much lending already, etc. That's what our jobs are, is to say, okay, where else can we find the solution for you?
Exactly.
So
well, this is it. Tech plus a human gets the best result. And do you know what? I wish that my product was called Psychic. It isn't. We can give you the best shot at going, right, here's a great starting point. Now just tweak it. It's just general tweaks, and then use it. Check in every month, see how you're tracking, make sure you've got that security blanket. And if you need some help, Swoop Funding, way to go. Well, that, my friends, has taken us to about 1 o'clock. So every single one of the questions we hope we answered. This has been recorded. We will make sure that you get it packaged up and sent out. I'll try and get all of the questions down as well, just in case we've missed any. And if we have done, I'll ask Andrea as well. So here we go. Raoul's finishing off with just saying, I had a great experience with the Swoop Advisor and a few CBILS applications yesterday. Very happy with the service. There, perfect. Yeah,
lots of amazing Futrli success stories and where they'd failed on CBILS before, etc. So it's been brilliant. We must post some case studies for
we will.
People, because using the power of the two tools has been really successful so far.
Brilliant. Listen, Andrea, thank you.